Hello, everybody. Today is the 18th of February. So, a lot of exciting trades. Um, a lot of exciting trades on the pound, actually. So, let's go look at what's happening in the pound market because, you see, I think some people might wonder, do I look at all the pairs all the time? Actually, not really. The only pairs that I look at are those that are actually moving, like over here. And of course, I take reference to this too. This is actually a higher time frame, so I'm always looking at a higher time frame. That's where the bigger move is supposed to be, and then also trade with correlation. You see, and I believe in basket currency correlation. So if you buy the pound dollar, we don't sell it. I don't sell the pound cat. The reason for that is because when pound dollar goes up and pound cat, generally should go up. Pound yen might go up so much. Some people say I don't believe that it's true. Well, they're probably losing money. The reason why, as a swing trader, you want to trade the correlations because it's true that maybe pound dollar goes up, maybe pound cat might be coming down, maybe pound yen might be coming here. This might be pound cat, right? This might be pound. I'm just talking based off. Sorry, just random topics that come to my mind, things that people mention. Oh dear, I lost my train of thought. So let's say this is pound dollar, this is pound cat, this is pound yen. Let's just say it looks like that. Pound dollar, pound cat. This is pound yen. Now it's true, there's no correlation at this point in time. Maybe this is the 4 hour time frame. Let's say it's a four hour time frame. Right? 4 hours. So some the candles are going up. This one candles on the 4 are coming down. Pound yen maybe is falling this way. But guess what? When important news comes out, or when there's a significant move in the pound, which is what we're trying to do, trading the 4 hour time frames, when pound dollar starts to blast up like this, guess what will happen to the pound cat? That's right, it will most likely move this. So while they are meandering here and there, times when they're meandering, we don't really care. But when it comes to the moment when we are trying to make money, when we're trying to make this money, maybe like 100 pips, right? Maybe you have 10 lots, 100 lots on this, let's say, right? When you're trying to make this money, and let's say you just have 5 lots, and that's $5,000 that you're trying to make. When this shoots up, whatever this guy is doing, he will also shoot up. Whatever this guy is doing, you can expect it for it to also shoot up a certain amount. So basically, what it means that when it comes to the moment when it matters, you better pray there's correlation. Because when that happens, when stuff is moving in one direction and you make your bet correct, you're going to make money. Can you imagine buying pound dollar and then selling pound cat, because you saw pound cat having a setup that looks to the downside, maybe impulse correction. Impulse? Are you going to sell this? Are you going to buy a pound dollar to the upside and then sell pound cat to the downside because you saw impulse correction impulse? You thought this was coming. Well, guess what? This impulse correction, this impulse can continue shooting up like this too. Because pound at the moment when it matters, when we want to make money, they all shoot up. So at the moment when it's important to us, we want the correlation. If someone tells you there's no such thing, you need to ask them for their MyFactsbook account and see whether they actually know how to trade. Okay. So let's just leave it at that. So this topic is over. Let's go on to something else. Um, next, we are going to look at what's this? Okay, so okay, so recently I did this chart here, pound yen, and so over at this point when it's high here, you're always looking for the down. And ultimately, if you're looking at something like this, you follow the wave count. This is what you have in mind. However, you actually trade this. It's actually quite interesting. What happened was I actually took the sell. Then after that, I'm taking the buy. Why? Because after that, I'm looking for the sell again. And it can seem confusing, maybe, but let's go see what it's all about, right? So over here, as you can see, when price action reaches the top, of course, what are we interested in? We're always interested in the sell. So did I sell this? Yes, I did. Did I sell this? Yes, I did. Right? Now, why didn't I stay in the sell? Because when I was looking at this, you can see here, you see that? There's no divergence right there. And the way this comes back down is because stops are going to get hunted over here. I can see that that's where it's going to go to hunt the stops. And after selling this, then after I was after selling this, um, I get back the profits. It came here. I was already in profits, and I took off some because why? Because I could see this. I could see this. And this is, we all know that beautiful stuff, 5, right? So that means this one can shift over there. And when you say looking for sell is once, we all know that 1, 2, 3, 4, 5. Once you reach a 1, 2, do a 1, 3, or 5, what's going to come next? Yeah, it's very famous. They always say A, B, C. This may never happen. It's just something nice. But this one is what you have to be very wary of, right? So this one can always come down. Yes, it can come down, it can go up, it can come down, and it can go up again. Or this one can do what? It can do this, and that is all. And then this one just comes down like that, this way. So no matter it comes down this way or whether it comes down to go one more up, and this becomes a 1, 2, 3. The one thing that they have in common is that they all have this down move, you see, up to a certain level. So that's why at the top here, you're looking for the cells. You're looking for the cells, you're looking for the cells, you're looking for the cells, looking for the cells. But once it comes down to anywhere here, you should have already taken off some money off the table. In swing trading, if somebody, okay, this is going to tell you one secret about swing trading. 1 hour, 4 hour time frames, mid time frames is not something that many people can do. All right, and you can quickly spot someone who is new. All right, let me tell you how you spot them. Is when on a time frame like this, they'll tell you, this is my risk, this is my reward. If someone does this on a 1 hour time frame or 4 hour time frame, and they draw it out like this, right? Oh, there's a tool here, you can draw it out actually. Yeah, like this. All right, like this. Let me tell you, these are people who are actually new to trading. This kind of trading style, okay, this is a secret, is that it's only good, all right, for scalping time frames. Because in scalping time frames, we cannot have such, we must know our risk reward. And usually it is like 6 pips, 5 pips, 3 pips, 8 pips at most, maybe 10 pips maximum, you're already out of the market. You cannot keep trades for too long, because scalps, when gone wrong, the entire account can go bust just like that, really, really quick, right? So you need to define it very, very, very accurately. But in swing trading, if you do something like that, expecting that, you know what, I put this to that, and this 1:2, that works for lower time frames, but not on the 1 hour, 4 hour kind of time frames. All right. Price action don't have to get to wherever this is actually placed. So some people like to do this thing. I was told that 1:2, that's why I was learned. 1:2, 1:3 reward, 1:10 reward is the way. That is not the way. All right. That is not the way. All right. So well, in my tutorials, I only give the trade ideas, but what I just said over there is something that is food for thought. I will not say so much about how we actually go about trading it. So what I only do is the trade ideas and where I think and where waves should go. But the actual trading style, like over here, the actual trading style, why we get in, why we get out, how much we take off, how much we keep, that is something that's professional trading, right? So if you want to learn that, you need to work with somebody who knows how to manage stuff like that. All right. Just remember, whoever tells you on a 1 hour and 4 time frame that this is my risk, this is my reward, that is Definitely wrong. Because just imagine this, imagine that we lost a trade. So we spent 4 hours and we lost a trade. Say let's say we got stopped out. So what are we going to do for the next 4 hours? Next 8 hours. Can you imagine just sitting at your computer for the next 8 hours or thinking about the $3,000-4,000 that we just lost? Can you imagine trading for investors who just saw a 3K loss, and then you have to wait another couple of hours for a trade to set up, and by then, let's say we lost it on Tuesday. By Thursday, we saw a trade set up. Friday, we entered a trade. Now we carry the loss over the weekend. And then on Monday, nothing moves. And on Tuesday, things start to move. You see, there's a lot of stress. There's a lot of stress when trading, when swing trading. That's why in swing trading, on a time frame like a 1 hour and 4 hour, we never do stuff like that. Right? Don't draw stuff like that. It's a giveaway. It tells people immediately that this guy does not know how to trade. Either that or when he loses a trade, he must be sitting at his computer for a very long time because he just lost the trade. Now he's trying to think of a way to make his money back. And all he knows is just to trade the 1 hour and 4 hour time frames. That means he's basically sitting at his computer 12, 15 hours a day. When you do that, it means that you're not very successful as a trader, basically. Right. So when you look at a trade like this, what you should actually do is, well, I want to help people, so I just try to share more secrets, right? Is that when this one goes to a certain level, you must know how to take off some money, right? I'm giving big hints. Take off some money, even though you see this happen, you think that yes, I want to get there. Yes, you want to go from here to there. Yes, but if you see something wrong, for whatever reason, you must know how to take off some money. Okay, because if you don't take it off, can you imagine how much money this is? This is a lot of money, basically. I mean, well, I don't want to say how many lots I'm trading, but basically, it's a lot of money. All right, so you don't want to give it all back. But when it comes back up here again, do we buy? Because it's trending, isn't it? Well, you have to be careful because the trade idea already said. My trade idea here says selling here not a good idea. Even if this one goes bust, goes flying straight through, I will still not be looking for the buy basically, because this to me looks like a trade setup for market makers to push it down. Because this, if I wanted to make money from people, well, guess what? This is like people who try to buy end up taking a loss. People trying to sell the down, take the loss. People saw trending up again, they take the loss. This one, oh, now it's going down, right? People sell, they take the loss. And then over here is boom. That would be perfect. And you know what is going to happen on Friday? There's news coming out. That would be the ideal move. Therefore, at this part here was the sell. At this part here was the, yes, I took the buy. You can see the results. I will post the results on my on forex-family.com on the blog. You can go check it out. The levels which I entered. I cannot remember what it was here. So just go to the website and check out actual entry levels, okay? Where I exited, etc. Then you all can do your own homework. Uh, your own homework. So this is a trade idea. It's important. It tells me where the bigger moves are. So once this one goes up, once it goes up, am I interested in the sell? If I see any reason to sell, yes, I will, and I hope for that. Do I? And here's the thing again. Will I keep it all the way down there? Of course not. When you go somewhere like halfway here, maybe I may even take off some of the trade. Even here, I may even take out some of the trade. Why? These are all reaction zones. Anywhere here, when it takes you out, you can always curl back this way. Then there'll be some kind of moving average here. And those moving average lovers, yeah, they'll look for the setups underneath the moving average and maybe sell it down to here. Once it gets there, you have to be careful again. Don't keep following the trend. The trend will end. Let's say it comes to here. Say, oh, it's trending. After the trend has finished, what happens? Boom. So you have to realize, you know, this is not a place to take sells anymore, because it can reverse very sharp too. This is the place where they can reverse. I've already drawn a line here, right? So be very aware. Be very aware. Okay, so that's pound yen. Sell, look for buys. Look for buys from areas of value. Sell from sell at sell at the high and buy the low. A, a common saying, but very few can pull it off. Okay, so try our best. Right. Pound Oz is interesting. Um, Pound Oz. If let's click the play button, you see over here. So see these moves over here. This moves when they come down here, when they play around here. If we look for a buy set, if a sell setup, you're taking a sell and you stopped out. There are a few ways to actually play this. From my experience, I know they like to come here. And once they go here, they like to react. Then there'll be some kind of downside as well. So for traders who know how to navigate this one, okay, you will be able to get out because naturally, as you can see, it came back to this level again. Okay, so what now? The trend line now goes this way. So at this point in time, this one, it's actually 50-50. 50-50. This one can come here like this, and then it can come down, right? And then after the trend line will change to the downside. Unfortunately, this one can also do something like this. Up. One more time, break this top. Then maybe then this trend line will go this way. Then maybe this one will come down. 1, 2, 3. This is the correction. And then 1, 2, 3. This can happen too, you see. And the reason why these moves happen is basically the market moves in ways to take out positions. That's just how it moves, right? Takes out positions. So to me, pound loss is not a very good trade at the moment. Not a very good trade at all. What would make this a good trade is for this one to actually just go up and pierce right through, like the pound yen. If it just goes and pierce this top, that's even better. Then you're going to have something like this, and then this goes pierce this top. Then this makes a very nice structure like this. Very nice time factor wave as well. And this is on the outside. This makes a good sell. If because I like to sell the pound yen, this is what I like to see. Correlation, good time factor, on the outside. Boom. This make good trade, right? So I have the pound loss in mind. I got a pound yen in mind, and I want them to look like they are both heading for the downside. That they have both completed their moves, and then I can sell this. So even though you lose this, but if you get that, you still make back everything and more. Yeah. Okay. So good trading is not about taking profit because there's no such thing as a take profit expert. Risk management expert. You can, if we know how to manage risk well, all right. If you develop a risk management strategy, not a take profit strategy, if you can manage risk well, then I would like to know you, man. I would give you money to trade, to be honest. I've given people $200,000 to trade. They were featured on the BBC, and they couldn't trade for nuts. My God, that's a different story altogether. Anyway, okay, let's go look at this one. Euro pound. Euro pound. So trend lines important. If you don't break, you don't buy. You see, if, now people who trade harmonics might have been interested in this. They are hoping that this will go back up. Maybe, but as you can see, they are now in trouble. They are now in trouble. Okay, so harmonics is a nice way to trade, but not the best. Not the best because statistically they have the issues. You see, and it's very easy to be locked to your computer if the harmonics is all you know because, like I said, it's statistics based. The win rate is not that perfect. Okay. Okay. The other thing here is that on this side, I'm looking euro pound sell. So this is very tricky. This also, even though I do like the idea of harmonics, I know that often there are failures here and it can go down. If it goes down to this level, this is a good buy level. You need then I would buy here. This is a good buy level if it does that. All right. But right now from here, you don't want to buy it. You don't want to buy it. It could go even further. All right, and you have a severe You see on this time frame, euro pound is a sell. That means, especially today is a Thursday, tomorrow is Friday. What you want to see is you want this to go down even further. Let it play it out. If you can go even further tonight, even better. So once this goes down tonight, if pound becomes weak, like what we want on Friday, then this one will shoot up. And pound yen will shoot down. Pound yen will go down. GJ will go down. Euro pound will go up. Right? Then pound Aus down too, and all because of the pound. Okay? So this is what I want to see. You want to see a correlation. It's good stuff. This one pound Swiss, you see. So you trade from with the bigger picture in mind, things will do well for you. So when we trade this, we know you get to a certain level, up to here, around a certain level here. That is what will happen, right? But will this continue? You see, that's hard to say. Once you've reached certain levels, will it continue to go or will it pull back? That one nobody knows, right? So you just take it to certain levels, take your money, let's see, then let the rest run, right? Let the rest run. It's similar to what's this? This one nothing much. It didn't move at all. Uh, Similar to the Aussie dollar breakout over here. You see. So this is what I'm trying to say, that they go to a certain level, but will this continue to go like the pound Swiss? This one fell. Pound Swiss went. So the idea is take it to a certain level, and then just let the trade run. There's no telling whether it's going to go or whether it's going to pull back. When it pulls back, it can pull back so fast that you just get stopped out. If you took off some profit here, you just shift your stop loss. It comes, takes you out. Okay, so that's so be it. Just move on to the next trade, right? Of course, then you start looking at levels like this. Start looking at this. Start looking at that. Right now, it's been a high like this, so now you're looking at that. So always drawing these little lines to try to figure out what exactly is going on. So now that you have this, what's the area of value? Area of value is if sun comes back here, pulls back the trend line. Then you look for a reason to buy, just like this. You look for a reason to buy. What if it comes here, it doesn't break above, it just continues down? Then it means you're not in trade because it did not break. And this is actually, and what you're afraid of is something like this. You see, this way. I need to check what this here. You're afraid of that, you see. That could happen. So let's go, just look at Aussie dollar real quick. So I'm checking also with my trade suggestion. I'm looking at the currency strength, because that's what trading is. You're looking at currency strength. Aussie dollar, where are you, my friend? Let me just have a quick look at this. So I'm gonna go Aussie dollar. Okay, let me just go down to, so nice. See, 1, 2. This could be a 3. This could be a 4. This could be a 5. I'm looking at Aussie on this side. Aussie is pretty strong. Dollar is pretty weak. On this side, Aussie dollar is a buy. Therefore, no sells. No, don't think of impulse like this. Even if this one looks like strong, and then like impulse correction, impulse. No, man, you better not take that. Why? This one can come here and crawl, and you know what people like to do? They like to do, okay, man, this is my Fibonacci. Hit my 618. Hit here 618, and then let's go. Impulse correction. No, don't do that. That loses money. Okay, this one can crawl like that up. All right, and then you have like a 1, a 2, a 3, a 4, and a 5, and then an A, B, and then some long, the ending diagonal of some sort. All right, that can happen. This can look, even don't, this can look sharp, right? And then the candles like this. This is the best way. You see here, sharp, and then it's just drift down. There is no big correct structure over here. And when you're trading what is a potential fourth going to a fifth wave, this thing can be very complex. This fourth wave is complex. This fifth wave can be very tough too. So don't play the idea of this around the fourth and fifth wave. Gonna lose money, right? So there is a strategy for, see, to be a good trader. Let's say you want to be a day trader, you need to know everything. Some people scalp forex, and when they do that, they're usually scalping for only a very brief moment in the day, maybe 1 hour, 2 hours at least. They'll turn off their computers. But if you want to be a trader that trades 24 hours, gotta be good at everything. It's like a batter. Someone throws a ball at you, a hard ball, a soft ball, a curve ball, a fast ball, whatever ball. The batter must hit everything. If the pitcher says, "Hey, this guy can't hit a curve ball. He knows it's coming, but he still can't hit it." That type of trader, when he hits, when he finds something that he does not understand, he's going to lose money. You see. So if you want to trade all day, all hours, all pairs, they are moving in all kinds of different conditions. You just got to know everything. Time factor. You got to know the wave counts. You got to know. Sometimes this doesn't work. Sometimes you got to trade as if you're going to lose, right? I'm not trying to sound too philosophical here, but trade like you're gonna lose. So let's say right here. Let's say I'm trading like I think I'm gonna lose. So let's say I'm keen on this, right? Let's say I'm keen on this. And I see this one come here. Let's say this looks really really easy, right? So if I say I trade like I think I'm gonna lose, so I'm gonna wait for this to go up. Maybe if it makes it easier, that will happen. Then it goes up. Then it makes a bigger sideways like this. To me, these are good trades for the upside. So if I trade like I think I'm gonna lose, what I would do is, if let's say this one, the candles over here, and then this one starts to, it is just one setup. Yes, I will buy. I will buy this, and if I think I'm gonna lose, I don't want to lose the whole move. So if I have the privilege of having a candle pop out above there, right? When I buy, I will put my stop loss, because this is based off a candle entry. My stop has to be right below. The candle is supposed, meaning it's an engulfing candle. It is supposed to win. Like, what do I mean by that? I mean something like an engulfing candle. There are many kinds of setups, right? This is not about teaching people how to enter trades, because that's a lot more complicated. But basically, something like this. So let's say if you have that, and like in this case, you have a full candle separation over here. So that is an entry. A candle that does not touch this trend line, that is potential entry as well, right? So another way of trading, like we don't want, like as if we think we are going to lose, is, let's say this one comes out like this. Let's say it comes out like this, and I think that this is going up, and I buy it here when it breaks, right? So if I believe that this one must work, it means it should not break this trend line. So what if it goes up here and then it crashes right through? I'm supposed to be stopped out, correct? Now, if I don't want to lose, guess what I must do? My stop loss has to be even bigger than that. So it gives me a chance to exit when this one comes down and goes back to stop people out here. And then I will have one chance to get out. And therefore, the lot size has to be much smaller if I'm playing with this kind of mindset in mind. So that so well, I guess this is a secret that I just shared. Basically, the idea of having a bigger stop loss can be is something that you should try to explore, right? But Sherman, you're not the boss of me. I'm not going to listen. I'm going to trade any way I like. Well, I won't say anymore. Okay, so in swing trading, trade as if you think you can be wrong, so that when things go wrong, you can still exit. And when you're trading very large amounts of money, investors don't like to see losses. Even though they say it's okay, so long as you come up with a net win, trust me, you don't want to see red on your account, right? So if you can exit even a break even or a small profit, that's what people like to see. Okay. Um, so okay, so just to summarize, we are very interested in Aussie, Aussie in the Aussie strength. We're very interested in the pound strength for now. Today, at this moment, it's a Thursday. Okay, for now, we are interested. Uh, we are not. I'm not so interested in the euro pound sell, although it's going down now. Okay. Um, Euro or sell. Let me just check. Euro is going down at the moment. Um, yeah, but to me, I think all these are going to reverse by tomorrow, or at least by next week. So let's go look at one last pair, last pair. Euro. Okay, where is it? Suddenly I couldn't see. Okay, Euro. See, it's over here. So very quickly, just put on some lines, right? So you just put on some lines. So at this zone here, it starts to experience some problems, as you can see. So even if this was to go further, it could pull back right there into this area of value before it goes again. And why do I say that? Think of the pound os. Think of the pound os. Can you see what happened? This is perfect. So this is exactly what I mean. You see that? So when it comes down to these areas, guess what happened? It can pull back, you see. Now, if this had gone further down, it may actually set up for a good buy. And that's why once you have reached certain areas in currency trading, once it has reached certain areas like broken at previous low on a 1 hour time frame, it is very tricky, just thinking that you can continue further down. You know. So right now, I just put on a moving average. It's below the moving average, but even if it comes down, it can come down for a little while before it pulls back up again, right? So at this place is not a place that I'm too keen on to buy, to be honest. Yeah, I'm not too keen at this moment. Well, I would be keen in is places of value up here, up here. You see that? So let's say up here, places of value. Anywhere up here is a place of value. Anywhere at the bottom, you see, it's tough. It's tough. You don't want to sell it when it has really made a big move. You see. So now it's been a big move. What happened? It tried to go up. It tried to go up. Finally, it goes up. It's been a big move. You may try to go up. You may try to go up. And finally, pummeling. You don't want to get caught here. So even though Euro or says sell, the trick to using this actually is you want to understand what is actually moving the market. Right? If this has moved a lot in the market, then hey, maybe it's not a good idea to sell anymore. So it's very important to see in relation to currency strength what the market has done. Does it make sense? Um, let's go look. Okay, so we covered the Euros. So we are thinking Euros might make a retrace. So when we take a buy, don't think something like that. Yeah, you think a buy, you think of something more conservative. So something conservative is always good. You don't even have to take a whole thing. Something conservative from here to there is good enough, right? Something half from here to there, that's perfect. That's fine, right? So bear in mind, these are all going to become counter trend, and and don't try to aim for the stars. I think it's important. And yeah, so I'm just hoping that pound yen goes up because I'm in this trade. From here, what are we looking for? Do we buy here? We don't buy here, right? We can buy here. We can look for areas of buy here, right? Don't buy. Say, oh, but Sherman, you talk about breakouts. Yes, yes, there are breakouts, but the breakouts need to be in the area of value. You take a breakout somewhere at the top. The breakout could just finish what it's doing and just spin back so fast, your head will spin. So don't take breakouts. Don't take breakouts at the end of a move. Don't take breakouts at the end of the move. When it's still early, you can, but when it reaches the top, you see, they can flip back, right? So the position of price in relation to its history is important, right? And currency strength, right? Don't just buy because it says buy. Understand how they work together, right? And yeah, I hope that makes sense. Okay, I'll just end here. Thanks for watching, and bye bye.